Well, I think today is a good day to update my thoughts on the state of the economy, where we're headed from here, and especially how it all ties into the events of this week and the whole post-election fiasco. Um, I have been talking a lot about the coming collapse of the United States as a political entity, about how I think that the federal government has lost a lot of legitimacy, about how the stakeholders are doing nothing to try and repair that legitimacy, to put Humpty Dumpty back together again. But I have been skipping over a key ingredient in all this, and that is the state of the economy. In order for the U.S. To truly come apart, there's going to need to be a final economic collapse as well as a political collapse. These things are very closely interconnected. Politics and economics are always closely related. And that's because our economy currently is being held together by the strength of the federal government, the legitimacy of the United States, I guess we should say the full faith and credit of the United States. That is what is keeping our economy from totally collapsing, even though right now, it's not like we're in a good space with, there's been a lot of damage done over the last year. Things are not in good shape. A lot of people are hurting very badly, but things are not nearly as bad as they could be. And that's because the Fed has been propping everything up. The Fed has been just creating runaway inflation in asset prices, in real estate, in stocks, and bonds. And just to review, the Fed does this by manipulating interest rates. When interest rates are low, people cannot make a good return by loaning out their money or by saving, by buying bonds and things like that. So they need to go further out the risk curve. They need to buy more risk assets. That means they need to buy junk bonds, they need to buy stocks, they need to buy real estate, anything that has more risk associated with it, because the interest rates, the base interest rate is zero. And so this diverts all available capital in the economy into certain sectors. And this, it forces people to invest just so that they can keep up with inflation. And this creates an illusion of prosperity and economic growth. And it's the sort of thing that people used to say, it used to be taboo because people would rightfully think, well, gee, if you're just printing a bunch of money to try and prop up your economy, that's going to lead to massive inflation. And then lo and behold, it happened. But since the financial crisis of 2008, people have started to believe that was an old wives' tale, that you can print as much money as you want, and that doesn't make a difference. And so I guess something I'll explain that not a lot of people really understand, I think, is that the reason why you don't have massive inflation in the United States with this sort of a policy, but you do get in other countries with the exact same policy. If Argentina did exactly what the U.S. has been doing since 2008, Argentina's currency would be in the toilet, which their currency already is, but that's because that's not related. I'm saying independent. If the Argentine government and their central bank did exactly what the U.S. Federal Reserve did, Argentina's currency would be trash, would be toilet paper, and that's because the markets do not trust Argentina. And so they would have seen what they were doing, that they were manipulating their economy, and they would have sold the Argentine peso in the foreign exchange market, and that would have been what caused the consumer price inflation. Because what the Fed's been doing since 2008 has not had such a direct impact on consumer goods. The Fed is not printing money and handing it out to consumers. The Fed is printing money and handing it out to banks, and that is enriching certain people. It is only inflating certain prices in the economy. But because the foreign exchange markets and the world overall has a lot of faith in the strength of the United States government, in its legitimacy, in its ability to control the dollar and to not destroy the dollar's value, they have not sold the dollar into oblivion, because that what happens when your currency loses value in the foreign exchange markets is importing goods from other countries becomes very difficult, because all of a sudden it takes a lot more dollars to equal €1 than it did before. And so if the U.S. loses a bit of its legitimacy, if the foreign exchange markets loses confidence in the stability, in the political stability of the United States government, then they perhaps will not have so much faith in the value of the dollar, and you will start to see it lose money in the foreign exchange markets. That's one way that we could see inflation finally start to come into our massive hyperinflation. I mean, start to come in. Obviously, we have inflation. Inflation is bad, but it's not nearly as bad as you would expect, considering how awful the policy of the central bank has been. And so it's very dangerous for a government to, for a loss of confidence in government. Confidence is what the government is built on. If people do not have confidence in the government, if they do not have faith in the government, then it just falls apart. The government is an abstraction. And so that's one risk of more events like January 6th occurring in the future, which again I think is guaranteed at this point. I think that the political stability of the U.S. is going to continue to decline. But that's not the most likely path to the collapse of the dollar that I see. To me, what I've been talking about since the lockdown started is that the response to the lockdowns and the total economic decimation of the average American is going to have to be people's QE, which is a term that's been around for a long years. It's kind of tongue-in-cheek. It's quantitative easing for the people rather than quantitative easing for the bankers and for Wall Street, which is, the printing of money and just giving them money to spend on whatever they want. Because, of course, there is no real, the government can't afford to support people because the government, through taxes, because taxes, it takes from people. So the government would have to tax people to pay people. It wouldn't, there would be no net effect. And so the only way to give the people overall more money is if the government prints it and hands it out to them. And the federal government has been very restrained in doing that over the past year, much more restrained than I would have expected. We've had, indirect payments? Has it been... Yeah, $1,800. I kept confusing the 2,000 and thinking, which ones I had. There's been a lot of things that are blended together, but yeah, it really was only the $1,200 check and the $600 check. It's hard to believe. I had to think about that in my head for a few seconds, but that's all it's been. And $1,800 to every American is not a lot of money, and so that's not going to produce hyperinflationary scenario. What we need essentially is something much bigger and more sustained, something like a UBI type of thing. Like, let's say $2,000 a month forever, or for the next year. Let's say they did that. Let's say that now that Biden's president, they passed some big stimulus bill that says we're just going to give everyone $2,000 a month until the pandemic subsides. That's the kind of thing you'd want to look for that would absolutely destroy the dollar, because then what do you have? You have people sitting at home doing nothing and collecting a check, and you have the whole country doing that, or at least a good swath of the country. So what does that mean in the aggregate? It means that you're going to have less production, you're going to have less people working in the economy, and you're going to have more money circulating in that economy, more dollars chasing fewer goods. That is inflation in a nutshell. And so that means that these the stimulus payments that are supposed to bail out all these people out for their lockdowns very quickly are going to become worthless, or at least not worth as much as they would have wanted originally, as they needed. And that will, of course, exacerbate political tensions. People will be upset, and they will take that rage out, that frustration out on the government. And once if the government really does kill the dollar, which again I don't know, either they kill the dollar or they kill the economy more than they already have, which I mean it's going to happen either way. But I don't see them pulling a Paul Volcker move, where Paul Volcker just raised interest rates up and purged out all the bad debt in the economy to start things over again. That's just there's no tolerance for that in this country. Either the lockdowns have to end, or you send people lots of money that's printed by the Fed. I said at the time that the BLM riots, that round of them, I thought stemmed pretty directly from the lockdowns and from the economic devastation that was being wrought in this country. And I would say the same thing about the events of January the 6th, although it takes a lot more to try and rile up the right. And so their reaction was delayed compared to the left's and was not nearly as widespread or extreme. But perhaps when you combine the coming economic problems with the ghettoization of our economy that is happening right before our eyes, as pretty much anyone who supports Trump is having their livelihood threatened, perhaps the right will have even more incentive to lash out over the economic pains that they're going to feel. I brought this up, a couple days ago, whatever, but the Stripe, the online payment processor, when they start going after people, that's going to be a very serious turning point. Right now, it's just people getting banned from Twitter and Facebook and stuff like that. That's something that doesn't destroy your livelihood, although it's very clear that everyone who was photographed at the rally on January 6th, not even just the people who went inside the Capitol, everyone who was present at that whole event, they are being doxxed, and their employers are being harassed to try and fire them. And so if economically speaking, Trump supporters become second-class citizens, they become a second tier of the labor force behind the Trump opponents, it's going to be much easier they're going to be much more susceptible to economic declines and to economic problems. And so moving forward, we may see them start to become the vessels of even more unrest than the left. Because what was it that people would always say about BLM riots over the last few years, not just last year, but years going back? It's where do all these people find time to protest all day? Don't they have jobs? And the joke is that no, they don't have jobs, because the Democrats have a large base of people who don't work, who support their politics, people who live on welfare. People who really don't have much and don't have a whole lot to lose by going out and rioting and stealing stuff from Target. Well, as right-wingers are ostracized in this country, as they are cut out of the economy, you're going to create a base of people like that on the right too, people who have nothing left to lose. And people who have nothing left to lose can be pretty scary. I think that part of this Patriot Act 2.0 thing that's coming out, and remember the Patriot Act came from Joe Biden to begin with, just didn't get passed until the Bush administration, but that whole thing that they're teasing now about trying to crack down on domestic terrorism with an emphasis on white supremacy, they're probably, something that wouldn't shock me. I shouldn't say probably, because I don't know if that's the case. They could create a master list of essentially problematic people who should not be employed. Maybe eventually you could even start having the Treasury Department sanction American citizens who are labeled, domestic terrorists, in the same way that they sanction foreign enemies. Now, I guess the final thing I'll try and address today is the crypto space, which is not something I'm particularly into. Somebody asked me yesterday to get into a bit on my thoughts on cryptocurrencies and stuff, and the big Bitcoin run-up. Every time that Bitcoin has a big run-up, a lot of people want to say, oh, we're vindicated. See, Bitcoin was, it was a big deal all along. Oh, you guys should have bought Bitcoin a long time ago, blah, blah, blah. And then, 2 weeks later, it's down at like $3,000 again. Actually, I don't think it would fall that low again. $3,000 is probably a floor for Bitcoin. It's probably not, we're not going to see that again anytime soon. But anyway, the crypto stuff is highly unstable. I do not see cryptocurrencies as a hedge against inflation in any way. I think that it's still too young of a technology, but what the purpose of the cryptocurrencies will come to is, I guess stable coins would be useful for this. It's a way of trying to disintermediate from the official economy, from the established economy, because the big banks, the Treasury, Stripe, social media, all of corporate America is going to try and put the so-called domestic terrorists into the economic ghetto. And so they need their own infrastructure, their own social media infrastructure. I mean, Parler just learned this. They don't have their own servers. They were hosted by Amazon. That's not smart. So they're going to be offline here for a while until they find, a new someone to host their website. And so I think cryptos will be a part of this. It will be the new financial infrastructure for the counter economy, which, that's an agorist term, but I mean, it's coming into effect here. I mean, a lot of people are going to be brought into the counter economy. It's building sort of an economic, or it's economic activity outside of sort of the official state-sanctioned market. And so I see the role of blockchain technology in the financial space of providing the new infrastructure for people who no longer have access to our financial system. To me, with the best thing that could happen, and I haven't seen one yet that didn't seem like a fraud, is if someone would create a sort of crypto-based gold currency. And by that, I don't mean something to where they associate the name of the thing with gold, or they call it gold, and they say, oh, look, we have all this gold in a vault, just trust us, as if they're Fort Knox or something, which is exactly what the U.S. used to do. That's no good. In order for it to have a real, something that is as good as gold, it needs to be 100% convertible into gold, meaning at any time, if you have a wallet full of this so-called gold cryptocurrency thing, and it's the value of like 3 ounces of gold, you need to be able to go to the issuer of that cryptocurrency and say, hey, I want my 3 ounces of gold. And there cannot be any sort of fractional reserve system that's built up off of. For every digital ounce of gold or silver or whatever it is, there needs to be a physical ounce backing that up. And even though Bitcoin is scarce, I'm not a fan of something like Bitcoin that has no physical presence. It is a good thing that Bitcoin is scarce, so that because if it ever gains popular adoption and does stabilize to some extent, then it will not be able to be inflated. That is a very good thing, but that's an if, and Bitcoin at this point is not at that stage. So I would not, if I was kicked out of the mainstream economy and I had to pick something else to transact in because I had no access to banking, I would have to pick something that is stable, that is not like Bitcoin. Even something that is, denominated and supposed to mirror the dollar or something would be better than Bitcoin for that purpose at this point. But something like gold or anything else that has value in the real world, gold, silver, platinum, that already has a value that is relatively stable. Particularly gold is pretty stable, compared to Bitcoin, certainly. And so if you pair that with the blockchain technology so that you can digitally send it anywhere in the world without having to go through Wells Fargo or Bank of America or the U.S. Treasury Department's International Payment Processing System, which the name escapes me. It's very close to Stripe, but Stripe is not, that's not Stripe. Stripe is something different. So I covered a lot of stuff today, and I guess that's about all I have to say for this video. So if you get anything of value, please do click that like button and subscribe. And if you haven't already, please do check out my BitChute because if you're on BitChute, please subscribe because I don't know how much longer anyone will be allowed to be on YouTube. YouTube might do what Pornhub did and say only verified users, only people in the partner program, and just get rid of original content altogether. So with that said, I guess I'll see you folks back here tomorrow.